Hello everyone, welcome to this week's edition of the Fibonacci Review. Today we're looking at this major currency pair, the Australian dollar, the US dollar currency cross. What we're going to see is a fabulous example of the Fibonacci series in time and in price, giving educated traders a very important clue as to the next directional campaign. Now, when we look at this chart, instantly my mind looks at the Fibonacci retracement tool, and I generally go from the previous major low to the major peak, or the major peak to major low. And there was a very significant low here, October 2022, very significant peak here, February 23. So in Optima, I just go into the tools, I find the Fibonacci set of tools, there's the Fibonacci retracements, and I just put that from the low price up to the high price. And what we're doing is simply dividing that range, or that price range between the low and the high, into the Fibonacci ratios. And then we just watch to see what the market does when it gets to these very significant harmonic ratios. And all we need to do then is just to continue to move this across to the right-hand side and watch what the market does. And what we can see here is that the market got very close to 67.80 through here early April, had a reaction pull back. It retested that again mid-April, had a reaction pull back. The third time it gets to a resistance level, typically you would expect that it's going to break through. It usually retests it 3 times and it's the third time that breaks through. But if the market fails to break through on the third attempt, then that could be a significant turning point on the chart. And you can see that educated traders were watching this very, very carefully. And for 3 days, it just sat there trying to figure out what it was going to do next. If it takes out the low of the previous 3 days, then that to me suggests that this market is going to fall lower. And you can see that from about 67.40, the market's dropped to 66.20. So there's around 100 points of potential movement in through there. We're currently around the 50% level, which is an area that Gann told us to watch carefully for reversals. But on the whole, you can see that this market really has just been going sideways right back from the middle of March. There's no trend or direction here. And for some traders, that's a very, very tough area to trade. And they'll just walk away until you get a strong trend either up or down. Where Gann comes into the picture, and for me, it's a fabulous body of work that he left behind. He told us that time was more important than price. And he would have known that this was going to be a significant top months before it came into play, because he simply kept time counts from all of the major turns. And he watched to see what transpired around these Fibonacci numbers, but particularly the number 144, which at one point he said was his greatest discovery in trading. And if we simply take a time count, and just for brevity, I'm going to take it from this low, and you can see from that low to the next top is actually 145 trading days. Now, if you zoom into that chart, you can see that 144 days, and if we just put that on 144, the market just broke above it, but closed well below it, and that was the start of the decline. So the 144 factor, which Gann loved on his charts, with a previous resistance point right around this level, was telling him that this was now very likely to decline. He'd start shorting this market when it breaks through this interim point just through here in between the two tops. He's adding to his position in anticipation of a continued decline. And as you can see, from 71.5, it went all the way down to 65.5 before it found any kind of support. So it's the use of the Fibonacci ratios in price which can lead to significant opportunities, and also the Fibonacci ratio in time should not be overlooked, because that in itself can give educated traders some terrific opportunities. So I hope that makes sense for you. Of course, any questions or queries, you're welcome to send them through. See you again next week with another look at this fabulous Fibonacci technique in trading. Bye for now.